Facebook has dropped more than 25% in the biggest one-day drop in stock market history. Meta published lackluster results, revealing that it had failed to expand for the first time in its history. The collapse personally affected founder Mark Zuckerberg, who saw his holdings lose tens of billions of dollars overnight. Concerns over the woeful results caused its stock to fall more than 25% when trading resumed the next day, wiping $200 billion off the company's worth in hours. Hey, welcome back to Economic Insiders. Give this video a big thumbs up, and don't forget to subscribe to this channel. It's free. Now, let's move on. Meta's previous largest collapse was in the summer of 2018 when it was still branded as Facebook, and it lost $121 billion in one day. Investors predict policy tightening at the United States Federal Reserve to erode the industry's wealthy valuations after years of ultra-low interest rates, which began in 2022. The Nasdaq, which is dominated by technology, lost more than 8% in January, its largest monthly decline since the end of 2019. For the first time, Meta witnessed a drop in daily active users from the previous quarter as rivalry with rivals such as TikTok, the video sharing platform founded by China's ByteDance, heats up. According to Meta, around 3% of worldwide monthly active users in the fourth quarter were merely breaching accounts, while duplicate accounts may have been responsible for roughly 11% of use. While TikTok is now the fifth most popular social networking site, Facebook remains the third most popular, just after Instagram and YouTube. However, Mark Zuckerberg's dominant app may be approaching the end of the story. Facebook's user base fell from 198 million to 196 million in the third quarter of 2020, and this trend is likely to continue. However, it is not simply rivalry that is driving people away. Facebook has been accused of everything from selling users information without their agreement to organizations like Cambridge Analytica to allowing foreign entities to meddle with the 2020 election. The frustration with Meta's results and consequent price drop brought back memories of the downfall of the tech boom in 2000. Following the sector's recent record-breaking run, investors appear to be getting more cautious. However, its revenue estimate for the first quarter of $27 billion to $29 billion fell short of analyst expectations of $30.15 billion, as per Refinitiv. Apple's iPhone privacy reforms, which affect ad targeting and measurement, are estimated to cost the business $10 billion in revenue this year, according to the company. It also claimed that macroeconomic challenges like inflation and supply chain disruptions are putting a strain on advertiser expenditures. Facebook is also investing more aggressively in products that make less income in the immediate term but have great growth potential, such as Reels on Instagram. The company's primary social media business, listed under its family of apps, generated $32.79 billion in sales and $15.89 billion in profit growth in the quarter. Even Instagram, which is owned by Facebook, has witnessed a drop in subscribers and traffic since 2017. If current use patterns continue, Facebook's grip on the globe is slipping as TikTok makes a bid to replace it. Lou believes TikTok offers more innovation and enjoyment than Facebook. Moreover, Facebook should avoid collecting people's personal information while attempting to market to the younger generation. So, is any way Facebook's joining stakeholder economics responsible for this heavy collapse? Because their shareholders don't seem happy at all with their decision. The controversy over shareholder versus stakeholder capitalism has raged for decades, and it has become particularly heated in recent years. Shareholder capitalists argue that firms have just one goal: to generate as much money as possible for their shareholders, and that attempting to do anything else will backfire. People who support stakeholder capitalism argue that corporations should consider all of their stakeholders, not just the owners, but also employees, consumers, and suppliers. and that failing to do so risks damaging the environment while cementing inequity. Stakeholder capitalism is gaining interest worldwide. It is the theme of the Davos Manifesto 2020, which was revealed last month by Klaus Schwab, founder and executive chairman of the World Economic Forum, in preparation for the World Economic Forum, which will take place later this month in Davos, Switzerland. It's also the Business Roundtable's new tagline, introduced in August 2019 and endorsed by nearly 200 CEOs of the world's leading firms. According to Steve Perlstein of the Washington Post, the declaration opposes the very concept of maximizing one value to the exclusion of all others. Rather, it recognizes the importance of balance and compromise in servicing all of a company's stakeholders. Experts think the idea that corporations should disregard shareholders and be concerned with stakeholder economics may prove to be the death of Facebook. As the stakeholders are not happy with the idea of Facebook to join stakeholder economic, since the interest of the present stakeholders is not good enough managed, a company needs to improve its company and generate money and value for its shareholders. Now it's time to see how Meta will recover from their collapse and strategize their next move.